The dollar is going down versus the gold price and the silver price. I'm expecting by the end of the year, Chris, we're going to get past the $40 silver barrier, and you're going to be looking at all that silver behind you as worth a lot more. The dollar's weak versus gold. How can you avoid it? It went from 1,800 a year and a half ago, 2 years ago, 1,800 to now 3,200, and it's stable. How can you ignore that? That's the dollar weakness.
You can't.
And
you can't do it.
Silver's gone from mid-20s to low 30s. How can you avoid that? That's dollar weakness.
The combination of President Trump's aggressive trade proposals, persistent inflation concerns, and the mounting federal debt has continued to put downward pressure on the U.S. dollar. At the same time, the broader world is beginning to question America's central role in the global financial system. While the administration has softened its stance on some of the more extreme tariffs and financial markets have rebounded from earlier volatility, the dollar's decline has persisted. JimWillie of the Golden Jackass emphasizes that the dollar's weakness becomes especially clear when measured against gold and silver. Gold's climb from around $1,800 a few years ago to over $3,200 today is a glaring sign of diminishing dollar strength. He notes that ignoring such a dramatic shift in gold's valuation is equivalent to neglecting the underlying erosion of the currency's purchasing power. Although gold has traded in a relatively narrow range in recent weeks, reflecting mixed risk sentiment and strong U.S. economic data that has dampened expectations for imminent interest rate cuts, it remains just below its all-time high of $3,500. Silver has shown a similar trajectory, rising from the mid-20s to above $30 per ounce. JimWillie believes silver could push beyond $40 before year-end. According to Gold Broker, silver prices have already risen 25% in 2025, but the potential for further gains remains strong. A move back to its previous high of $46 per ounce would still represent a nearly 40% increase from current levels. Ole Hansen of Saxo Bank notes that many of the macroeconomic and geopolitical conditions that fueled the surge in precious metals during the first half remain firmly in place. With new catalysts on the horizon, the second half of the year may bring even more upside for gold, silver, and platinum. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Trump was told, according to my buzz, Trump was told that they could not identify the owners, so they wanted to avoid the leasing issue. And there's still quite a few tungsten bars there, and there's a lot less gold than they want to admit. But the main issue is leasing, multiple leasing. Okay, if they show a bunch of gold, then the following question would be, who's the owner? Did you prove the owner? No, they did not prove the owner, so we're not going to do the audit. There's gold in Fort Knox, there's gold at West Point, and there's gold at the Federal Reserve in New York. So maybe that's where they'll do the audits. Fort Knox is largely a warehouse for nerve gas. There's more nerve gas in there than there is gold. The dollar's weak versus gold. How can you avoid it? It went from 1,800 a year and a half ago, 2 years ago, 1,800 to now 3,200, and it's stable. How can you ignore that? That's the dollar weakness.
You can't.
And
you can't do it.
Silver's gone from mid-20s to low 30s. How can you avoid that? That's dollar weakness. And unfortunately, as the gold price goes up, so are food prices. And now we're finally seeing gasoline and diesel come down. I got a contact in the Southwest, in the California general area. And he's saying, Jim, we're still not profitable in trucking. We need diesel to come down more. Trucking. We don't have a distribution system based on railroads. It's based on trucking. We have a little bit of rail, but it's mostly trucking. And this guy is telling me, he gives me an update every few months. He said, we're getting better. We're actually right near break even. Trucking. They were losing money. They were losing $0.015 per mile a year and a half ago, Chris. That's the effect of the fuel price. And notice Del Monte declared bankruptcy. Del Monte Foods. Okay, we're in trouble with the food chain. We need to get interest rates down, and justifiably, and we need to see lower interest rates. We need to see lower consumer price index. And I don't give a flying F what their PCE is. That's a device to control the economic growth. They don't even use the CPI to make the, they have it's economic, it's a gross economic statistic. I can't think of the right word, but they bring in the PCI to make it inflation adjusted. Their adjustments are all kooky. They're all full of crapola. They don't use the John Williams shadow government statistic because, Chris, if they did, they'd have to admit that we had about a 6 or 8 year depression, economic depression. I think we had about a minus 10% depression during the lockdown and the following year. We have a shrinking economy. We're not growing. We're slowing down on the depression. We need to grow.
Well, Jim,
we're still having layoffs. The layoffs are still all over the place. The dollar is going down versus the gold price and the silver price. I'm expecting by the end of the year, Chris, we're going to get past the $40 silver barrier, and you're going to be looking at all that silver behind you as worth a lot more. We're moving, I don't think, closer to an audit. I think we're moving closer to a gold standard. We don't need an audit of Fort Knox in order to institute a gold standard and a new dollar. It's going to be shoved down our throats. And I think we've got a transition going on right now where we need lower short-term bond yields in order to make sure that the Treasury bills are used in order to create collateral for the stable coins, which we didn't get into at all. The Treasury bonds need to be shoved into stablecoin territory. And I believe we're going to see a lot of Forex reserves being converted to stablecoin. And there's a hitch right now that the bond yield for most of the Treasury bonds held by central banks is too high. They don't qualify for stablecoin. So there's going to have to be a bond rally in order to move into digital territory. And with that conversion at the high end, the low end is going to be trade payments done in XRP. XRP and Ripple talk about winning 20%, 15% of SWIFT. I think they're going to win 40 to 60%. They talk about winning 20% of cross-border trade payment. I think they're going to win over 60%. And that's how XRP goes way past 100. And it's only $2 something right now. I think it's going to go way over 200. Over 100, way over 100 and probably over 200. And when it does, you're going to be seeing a lot less of me. Trump was told, don't fulfill the audit promise, work your way around it, because if they dug in deep to the leasing, they would have found that the Fort Knox gold and the New York Fed gold and the West Point gold was multiply leased, like at least 4 or 5 times. So they left it alone so people would not get a bullet in the back of the head. They left it alone, and so would I. I'm not interested in that.
JimWillie doesn't place much trust in mainstream inflation metrics, such as the Consumer Price Index or the personal consumption expenditures. He views them as fundamentally flawed and manipulated, especially during critical periods such as the COVID-19 pandemic, when he says the CPI figures were off by as much as 6 to 8 percentage points. Adding to the challenge, inflation data itself tends to be volatile. Real-time readings fluctuate significantly, making it difficult to identify clear trends. The monthly CPI change averages 2.3%. Moreover, the annualized monthly CPI readings over the past decade exhibit a wide standard deviation of plus-minus 3.55%, indicating that approximately one-third of the data points fall within a relatively broad band between minus 0.73% and 6.36%. This statistical volatility, coupled with the perception of manipulated reporting, leaves many analysts skeptical of headline inflation numbers. According to Willie, alternative sources like shadow stats, which employ older methodologies to measure inflation, paint a far more accurate picture of what consumers are experiencing. Until official metrics begin to reflect real-world price movements more accurately, he argues, they are of little analytical value, comparing the exercise of interpreting them to reading tea leaves in a toilet bowl. Let's get back to the interview.
I think it's going to be, if it's going to be a replacement, I don't think it's going to be soon. I don't think the cabal is going to cave in like that. They're not going to want the symbolic message there that Trump is pushing around the Federal Reserve. The Federal Reserve is not the same Fed that we knew 4 years ago. It's not the same structure. It's not the same board, but it's much the same loyalties. I think it's going to be Scott Bessent. Why would it not be? He's the Treasury Secretary. I heard rumblings 2 months after he took the job that he didn't really like the job much. It had a lot of routine BS work. I think he'd much prefer being involved in the, let's just say the Wild West wing of the Department of Treasury, which is the Federal Reserve. It's a Wild West. They don't have a lot of rules. They're involved with insider trading. They're involved with managing the Exchange Stabilization Fund. They're involved with under the table dealings. Well, the Treasury does a lot of the dollar swaps, but a lot of the management and a lot of the thinking is done at the New York Fed. I've regarded the New York Fed as the main office of the Federal Reserve, the New York Fed. And that was Dudley for years and years and years, Dudley. I think it's going to be Bessent, but I don't think it's going to be anytime real soon. The deep state and BlackRock and Powell are going to want to find a way that they can have a ramp and give a reason why Powell will walk on that ramp. And it's not going to be a ramp off the ship with hands behind his back, feeding the sharks like in the old pirate days. I think it's going to be a ramp into like an island. I don't know necessarily it'll be like a Virgin Island. Bessent. I don't have a number 2 guess. I really don't, except the DC Senator Homer Simpson. I have a policy and a rule that I don't waste my time reading the tea leaves of fecal matter. And I don't follow the PCE. I don't follow the CPI. I don't follow many of their statistics because they're all doctored. Let me make a certain point. There's a lot of confusion right now because gold is not following the real inflation rate, which is the CPI minus the interest rates. But the CPA is false. The CPI, Consumer Price Index, is false. And during the COVID period, it was wrong by 6 to 8%. Okay, the shadow government statistics has never matched up with the CPI. And when they do, I will begin to read their tea leaves with the CPI and the PCE, which is just a suppressed CPI. I don't read tea leaves of fecal matter. So I don't have a real strong opinion on a lot of what you just said because I don't pay attention to it. They lie on the CPI. It does not match the shadow government statistics from John Williams and almost never has. So I follow the CPI from John Williams, which is indeed coming down. And I'm not sure what the recent numbers are, since the Trump inauguration, but it was like 6 to 8% a year ago. So I don't know how to answer your question except to say the battles are being fought over false statistics, false justification, and reasons that they don't tell us about. So I believe the bankers are going to give some orders to Powell on what to do. What you're really going to see is, will the bankers tell Powell to lower rates? And if so, what justification will they use that's not the same justification as Donald Trump uses? And then they're going to say, we did it for other reasons, Donald. Leave me alone. Okay. The independence of the Fed is a very interesting concept. I don't get too caught up in it. What I'd like to talk lastly about is the widespread notion that the dollar is going to tank. And for the dollar to go down a lot, according to the dollar index, you have to have the euro go up. And I don't see any vitality, strength, or anything positive coming out of Europe. They're still stuck with the Russian sanctions, so that's harming their industry. They're still stuck with the nitrogen nonsense as a pollutant, so they got farm obstacles, obstructions. They still got a lot of migrant problems, which bring about violence and blocking streets in France and all kinds of rubbish. Okay.
Peering beyond the polished headlines and glossy economic indicators, a different story is unfolding, one where the dollar's prestige is quietly eroding, and traditional inflation metrics no longer inspire confidence. As gold and silver steadily outpace fiat benchmarks, and skepticism deepens around official data, the appetite for tangible stores of value is accelerating. The momentum in precious metals isn't just about charts and technicals, it signals a broader rethinking of trust in monetary governance and statistical integrity. This quiet shift may soon roar as economic narratives drift further from lived realities. Are we approaching a tipping point where confidence in official economic data breaks entirely? And if so, what asset will the world turn to for financial truth? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.